All right, let's get right into it. The whole world is buzzing about this AI gold rush, right? But here's the question nobody seems to be asking. What if the mine is about to collapse? We're going to cut through all that noise, look at the hard numbers, and figure out if this whole boom is for real or if it's just a house of cards ready to come tumbling down. Look, I've been in this game for a long, long time. I was trading back in the dot-com days, and let me tell you, this feels eerily familiar. The crazy hype, the promises of changing the world overnight, it's the dot-com bubble all over again, just with fancier graphics. The technology might have changed, but human nature, the greed, that's exactly the same script. And that's really where we need to start. You see these massive numbers everywhere, don't you? In every headline. They're insane, no doubt about it. But when you've seen this movie play out before, you know to look for the plot holes. And believe me, this one is full of them. Let's just take NVIDIA as a starting point. $57 billion. That's their quarterly revenue. That's a jump of 62% from last year. Now, on the surface, that is a phenomenal number. It looks like it justifies every bit of the hype, right? But that's just the surface. Let's really dig in now. Let's look under the hood of the market's golden child, NVIDIA. Because once you start peeling back the layers of the balance sheet, well, that's when you start to see some pretty worrying cracks. Okay, so this is where it gets really interesting. First off, a market cap of $4.4 trillion, trading at more than 50 times earnings. That's not just high, that's pure madness. But forget that for a second. Look at the real numbers. Their unsold inventory, it's piled up by 32% in just 3 months. Their unpaid bills, ballooning by 89% year over year. And, get this, it's taking them longer and longer to collect cash from their customers. That day sales outstanding jumped from 46 to 53 days. We're talking billions of dollars just stuck. This is not what a healthy company looks like. Not at all. And this right here, this is probably the single biggest red flag of them all. For every single dollar of profit NVIDIA reports on paper, only 75 cents is actually turning into cold hard cash. So where's the other 25%? Well, it's tied up in all that inventory we just talked about and in bills that haven't been paid yet. For a giant like this, that's a massive distress signal. And you can be sure the smart money, the big algorithms, they are already seeing this. So let's zoom out a bit, because this is much, much bigger than just one company. This isn't an NVIDIA problem. This is a systemic delusion. The valuations you're seeing across the entire AI sector, they've gone completely wild. I mean, they're not even tethered to reality anymore. All right, if you want a perfect example of this madness, look no further than ARM Holdings. I mean, this company is the poster child for insanity right now. They're valued at $140 billion on just $4 billion in revenue. Think about that. For that valuation to make any sense at all, the market is basically betting they'll triple their revenue and double their profit margins. It's laughable, frankly, especially when their R&D costs are through the roof and they've got a free competitor, RISC-V, breathing down their neck. If you ask me, it's worth half of that on a good day. And then, of course, you have the darling of the moment, OpenAI. Let's be very clear about this. This isn't a business. It's a black hole that's just sucking in venture capital cash. Just look at this number, a negative $16 billion. That's their projected loss for 2025. This is a company supposedly valued at $500 billion, and it's on track to burn through cash like there's no tomorrow. This isn't a growth story, people. It's a story about incinerating cash. So where is all this money going? Well, that brings us to the real world. All this hype is creating an absolutely colossal and frankly unsustainable spending spree on infrastructure. We're talking about companies building these giant data centers, basically castles in the cloud. The numbers are just astronomical. Over $1 trillion is being poured into AI infrastructure this year alone. But here's the dirty little secret. The main asset they're buying, those expensive GPUs, they're basically obsolete in 2 years. But on the accounting books, they're pretending they last for 6. Why? It's a simple trick to make the financials look better than they actually are. And here's another very real-world problem: power. Where is all the electricity for these massive data centers going to come from? The US is already way behind. Look at this. China added almost 9 times more renewable energy last year. A huge power crunch is coming, and it's not just for the server farms. It means everyone's utility bills are going to keep going up. And what about jobs? For all this trillions of dollars of investment, where are the new jobs? The simple answer is there aren't any. Money is pouring out of real sectors like manufacturing and into these automated data centers that need hardly any people to run. You see Microsoft and Amazon laying people off by the thousands. This isn't an economic boom for the average person. It's a distortion.
So you have to ask yourself, how is this entire thing staying afloat? Well, that brings us to the final and most crucial piece of the puzzle. The whole thing is being propped up by some very clever and very troubling financial engineering. It's a financial house of cards, plain and simple.
Take a look at how this works. It's a classic trick called round tripping. Step 1, Microsoft invests billions in OpenAI. Step 2, OpenAI turns around and commits to spending even more money on Microsoft's cloud services. Step 3, Microsoft takes that commitment and uses it to place huge orders for NVIDIA chips. Do you see what's happening? It's the same money going around in a circle, getting counted 2-3 times over, creating this illusion of massive growth where none really exists. And you know who sees this? The really smart money, the insiders. Peter Thiel, he dumped his NVIDIA shares. SoftBank cashing out billions. And Michael Burry, the big short guy who predicted the 2008 financial crisis, he's betting big that this whole thing will crash. Now, when guys like that start running for the exits, it's probably a good time to pay very close attention. So the big question is, when does this bubble pop? Well, based on the numbers we're seeing, it could happen a lot faster than people think. The first cracks will show up later this year, when reports start coming out about all those unpaid bills. Then, early next year, you'll see the credit agencies start issuing downgrades. And after that, companies will be forced to restate their earnings. And when that happens, the whole thing could unravel very, very quickly. Look, let's be clear. AI is incredible technology. It's going to change the world, no doubt about it, just like the internet did. But this speculative frenzy we're seeing right now, this isn't about the technology. It's about pure hype. It has every single sign of a classic financial bubble at its absolute peak. So I'll leave you with just one question to think about. When the music finally stops, are you going to be the one left holding the bag?